Property markets are just as scientific as share markets. Instead of buying shares in a company, property investment is like buying shares in a community. I'm so passionate about the science of property markets that I've given it a name, Propertyology. The primary purpose of investing is to make money. The better we understand the many factors which influence the value of the assets which we invest in, the greater the chance of us making more money. Property investors need to look way beyond the property which they see themselves living in and view it as a financial instrument. Knowledge is power. In the same way that stockbrokers study share markets for a living, I do the same with property markets. My core business is to study property markets and buy investment properties for those who see value in employing a skilled professional for a better outcome. I don't have a crystal ball. It's not an exact science, but it is very much a science. The science of propertyology. I feel quite strongly that it's always a good time to invest in property. Contrary to mainstream media rhetoric, Australia is not one big property market travelling at the same pace. Australia is a big place. There's over 9.3 million residential properties spread over 15,000 suburbs. The most important question is not when to invest, but what to invest in. During the decade prior to the GFC, property markets were very forgiving. Those who purchased a property at the start of the decade and kept it for several years will have made quite a lot of money. If those same people understood the science of property markets, they would have made a lot more money. A majority of property investors and those who make a living from promoting property confuse features and benefits with research. They get caught up in buying in inner city apartments and attractions such as cafes and shops, or buying a suburban house because of the land component, or buying in proximity close to water, as if the water has some magic quality that's going to make properties grow at a greater rate. The water's always been there, so if that theory was true, properties on the water will have always performed strongly, wouldn't they? Or there's the buy the worst house in the best street theory. The list just goes on. Property market analysis is my full-time profession as well as my passion. If our skills and our experience can just add 2% extra capital growth to one of your properties, a typical $450,000 property over 10 years, that equates to $165,000 to your bottom line. And that's just for one property at only 2% extra. To tap into the best property investment opportunities, one needs to understand how the world economies are connected. We need to understand the role which Australia plays in this world economy. And we need to understand the wide range of economic influences on both the supply and demand side of that essential commodity called accommodation. America and Europe have been replaced as economic power brokers by Asia. We are currently a little over a decade into what is known worldwide as the Asian century. This structural change plays a major role in Australian property markets. Much of Asia is going through a period of urbanisation that is bigger than the Industrial Revolution, which transformed the Western world back in the mid-1800s. We are seeing whole new cities, similar in size to Brisbane, being built every couple of months. It's called the Asian century for a reason. The pace of this transformation might fluctuate from time to time, but it's going to continue for decades. Many Asian people are emerging from poverty and entering the middle class. An incredible 2.5 billion extra people will enter Asia's middle class over the next 15 years. Asian countries need materials in order to transform primitive villages into modern cities. Australia has a lot of the commodities which Asia requires. The Asian century is one of many connections which Propertyology constantly researches in order to identify locations all over Australia for above average capital growth potential. Instead of investing in shares in a company, property investment is just like buying shares in a community. So how do we select communities to buy shares in? Well, it starts with understanding the economic assets of communities all over Australia. Our big business assets, our agricultural assets, our energy producing assets, steel making, our ports which receive and export goods to and from our shores, our tourism assets and our Defence Force assets. It includes understanding how supply chains to certain assets are connected. It includes researching what jobs these projects might create, how sustainable they are, where they are located, and where these people will sleep at night. We need to think of property investment as a business in providing accommodation. For example, when my research suggests that hundreds of thousands of extra Asian people are likely to travel our shores each year to spend their tourist dollar, I think, what attractions are they interested in? What additional major tourism projects are on the drawing board? How many construction jobs will these create and over what period of time? How many tourists might that attract each year? What long-term jobs will that create in those cities? What hurdles need to be overcome to get the green light? What extra demand will this create for accommodation? What are the vacancy rates for residential accommodation in those locations at the moment? And how affordable are properties at the moment? And do these locations have a diversified economy, or are they too reliant on tourism? Are these property markets planning to build more properties than demand actually requires? Astute investment decisions are made as a result of understanding economics. If the Aussie dollar is high, I'm thinking, which industries will benefit from this? Which industries will suffer? What locations around Australia have a heavy reliance on these industries? If the economic climate is about to create large volumes of additional jobs, where will these new employees come from? Is there enough accommodation already available for them to live in? Or will the economic climate result in lots of job losses? If so, what impact might this have on the local property market? Let's say Gina Rinehart, BHP or Rio Tinto announce that they're going to develop another coal mine or gas field. What approval process might they need to go through? How many people will they employ at the mine? What other jobs providing goods and services will that create at nearby towns? How will they get the coal or the gas from the mine to Asia? Where will all these people live? What proposals are going through council at the moment to meet the supply and demand? How sustainable is the economy of some of these locations? When I learn of a government policy or other factors that are likely to result in the construction of a lot of new properties, I think, well, a healthy local construction industry generally equates to a healthy local economy. But are the volumes of building approvals going through council likely to create more supply than demand requires? If so, that particular property market will become oversupplied before too long. That will be a less than ideal environment to own an investment property in. Lots of vacant properties means no competition amongst tenants that are looking to rent. It means falling rents and a bigger impact on the property investor's household budget. It also has a similar impact on the value of properties. On the other hand, if my research suggests that we will see lower supply of property than demand requires, I will anticipate competition amongst buyers and tenants, followed by price growth. The science of property markets also extends to knowing which pockets within a town to invest in, and which style of property is likely to have strong demand and limited supply. There are literally dozens of different factors which influence property markets. It's just as scientific as share markets. Follow us on Facebook if you're interested in snippets of our research. You can also sign up for our free research articles from our website. We invest so heavily in our research because we are so passionate about making people's investment dollar work harder. If you'd like some information about our services and our fee structure, please contact us. To schedule a boardroom meeting or a teleconference, please email your details and a little bit about yourself to me at simon@propertyology.com.au.